Absolutely. Likewise. Glad you could join us.
Yeah.
Right. So it looks like it's live here, and then
The live stream.
it's not showing up on the YouTube yet. But...
YouTube.
Yeah.
Perfect.
Good.
Let me just go back to the Zoom. Okay. Thank you very much, everyone, to join Digital Davos.
So it looks like it's
Cayman
live
Island.
here.
And
It's not showing.
what?
Perfect.
Let me.
Carl, I think that's maybe your audio from the YouTube.
Ah, okay, it's my audio from the YouTube. Okay, yeah, there we see it. I apologize for this little inconvenience, everyone.
What? I think that's maybe your audio. Good. All right.
Okay, so I disconnected my YouTube. I mean, we are still live on YouTube, but I disconnected my audio. So thank you very much for trying Digital Davos in Cayman Island. We have really interesting speakers here today, and the subject is about AI and blockchain, how it goes together, like a train, which is AI, and the rails, which are provided by blockchain. I would like to let the speakers introduce themselves a little bit for like a minute. Can you just present what you're doing and a little bit about yourself? Let's start with Linya.
Oh, hi, everyone. I'm very glad to be here. My name is Linjia Zhou, and I'm with Delphi AI. We are a US-based global AI servicing company. So what we do is we actually help organizations to adopt AI, and from initial use case identification and to build a personalized AI solution that can be 100% tailored to the use case. And our team's core capability is really to build an end-to-end solution from POC and to production. So part of our team's expertise include leading AI experts that have built one of the industry-leading AI solution machine learning platforms in the world. And we also have business veterans that worked with global Fortune 500 companies across all industry sectors.
Thank you very much. Let's go ahead with Nadia.
Hey everyone, I'm very happy to be here. My name is Natya Bester. I am the co-founder of Adlunum, a Web3 investment ecosystem. So we are an accelerator. We connect early stage startups to VC funding as well as to retail investment. I've been in the blockchain space since 2017. So I've seen a lot of things come and go. And I have to say the advancement of AI and this confluence between the two technologies is something that I'm extremely excited about. Because I think exactly as you said, the guardrails and the rails of the train, these two things are really coming together in a way that is extremely exciting. So I'm also the executive producer of a Netflix documentary that's upcoming about the future of the internet, evolution of the digital self, which again focuses very much on the confluence of these two technologies.
Perfect. Thank you very much. William, please.
Yeah, thank you so much for hosting this amazing panel. My name is William Samasegi. I'm currently the CEO and founder at Saz Mining, a company that I founded back in January of 2018. So been CEO and founder of that company for almost 6 years now. But I also host the Saz Mining podcast, where we bring on a lot of industry leaders in technology, people who run public mining companies, politicians. But the big thing that I've realized is that right now with AI, you're looking at an unbelievably disruptive technology akin to the internet. Obviously, there are some different dynamics that you have at play. And a lot of my time is spent thinking about some of the topics that I believe we're going to talk about in this panel today. So thank you again, David, for inviting me.
Thank you very much. David, please.
Yes, glad to be here and glad everyone could join. So I'm David Doss, and I'm the founder of CKC Fund, which is a digital assets fund advisory fund operator. And in terms of my background, I'm very interested in this topic, not only because of working in the digital asset and blockchain and crypto space for the last 6+ years, but also because of having worked on both AI and privacy oriented projects in past lives. So I think that this kind of confluence of concerns and considerations and innovations is quite an interesting one.
Okay, thank you very much. Myself, I'm Carl Siedig. I'm the moderator for this panel, and with William's experience, I ask for forgiveness. I am not so professional than you probably with the podcast, but I moderated some panels in Davos, and most of the audience will probably know me already. So
apologies for the interruption, Carl. I'm not seeing the live stream on the YouTube right now. I don't know if other people are, but just want to make sure that the audience is able to view.
Okay. Let's check the live stream for a second. More. Yeah, live streaming. Live streaming is on. Yes. It was live streaming. I had also feedback. The question is,
It seems to be working on my end when I go to the link.
Okay. Will, could
Yeah.
you send me that one so I can send to some folks who are asking?
okay, so when it
I'll post it
functions,
in here.
when it functions on one end, then
Okay, great.
Okay.
Sorry for the interruption.
okay. Thank you. I'm the CEO from GmbLX, and I'm the curator from Digital Davos. So thank you everyone for coming. So let's start without any interruption with the first question. So by basically how these two things goes together. Now, let's say blockchain and crypto, blockchain and AI. Most people say this has nothing to do with each other. So what are the synergies between these two projects? Who wants to take the first question? Nadia.
Yeah, I mean, I can kick us off. I think there are, to the contrary, so many different applications, but two definitely that I can mention that are both very close to my heart. Deep fakes. With the advent of AI, we are going to see more and more content that is incredibly questionable as to the provenance of it. Blockchain is exactly all about provenance. So that's definitely a very, very, a match made in heaven, let's say. One of the reasons I'm very excited about the fact that this conversation is being had all across the world. AI on the one hand, blockchain is not really a conversation that people have been talking about unless they work in the industry. And the other one definitely is privacy, which I believe is something that we're going to talk a lot about today. And with privacy comes data ownership and compensation for data, which again is a very interesting conversation if you then look at blockchain technology and the layers on top of it, like crypto, etc.
Okay, somebody wants to add something?
Yeah, I can jump in. So the way that I look at it in terms of a framework is kind of similar to the early days when you looked at blockchain and crypto and these terms that would get thrown around a lot. But at the end of the day, when you take a step back, it's just a tool. It's a technology. Just like how when you had the internet come to be, you couldn't build a lot of the business models that you see today. You can't build a Facebook, a social networking site if you don't have the internet. You can't build a company like Amazon if you don't have the internet. And so with AI, you have this new tool that completely changes the business landscape available to entrepreneurs, to existing businesses, and you have organizations that have to reorient around that. And so let's say that you're trying to build a company or you're trying to build a beautiful house. Now you have AI at your disposal. If you want to build a house, you need a bunch of different tools, including wood, but you might need a hammer, you might need a drill. And so now all of a sudden you have markets that can be serviced with this new technology of artificial intelligence. And I think that you're going to see a massive explosion of new companies, just like you saw a massive explosion of companies hit the scene once you saw the internet really gain adoption. And at the end of the day, I think that you're really going to see a new type of business model being formed in many different industries.
Did anyone from you see already some integration from blockchain within AI in a live example, like in some tool which actually right now integrate blockchain and AI and is up and running or is in testing? Any experience here?
Yeah, so an easy company that comes to mind right now is a company called Cactus AI. What they essentially do is they make it, if you're a student at a school, you can go onto Cactus and it'll help you write your essays using artificial intelligence with notations of where the sources are from, or you can put in any homework question that you might have and it'll answer the question for you. Now, this is a business model and a product that you never could have built. Even if I said, hey, I'm going to give you $100 billion to build out this product, you still couldn't do it, because even if you hired all the teachers around the world, you wouldn't instantaneously be able to answer the students' questions. And this is just one application. There are many different types of ways
involved in it.
Sorry?
The blockchain, how is it utilized with the AI together?
Oh, in this particular product, I don't believe that they're leveraging blockchain, but on the flip side, in terms of a product that comes to mind directly leveraging both AI and blockchain successfully at scale, the company I mentioned has, I believe, over 2 million users. Of one at scale today, I'm not sure.
Which leverage blockchain and AI.
I have a couple of interesting examples. So one that comes to mind is Enya AI. So they work on secure multi-party computation of private data. So there's AI algorithmic processing of high quantities of sensitive personally identifiable information, PII, which, as well as sensitive financial information. So use cases would relate to, let's say, health, predictive analytics around health, around, let's say, personal data for advertising, around another case that they work on is front running, trying to solve the front running issue in blockchain with predictive analytics, where the data is held private, but also has prediction models through AI. I think that is one area where if you want to make predictions around a high quantity of data and or data that is very private or personal or let's say legally sensitive, then and you want to do that within a blockchain meets AI sort of context. I also to Nadia's point about provenance, I was actually talking with a colleague the other day about this project Jet AI that I think is interesting, where they're looking to fractionalize jet ownership, if I'm not mistaken, and then also to look at basically predictive analytics of where basically flight paths, so tracking the path of jets privately, and then predicting flight path risk or mapping out potential flight paths is my understanding. So I think that combination of private data and predictive analytics and provenance is an interesting nexus there.
So following this questions, or is there any other comment? Okay, so we all know about it.
If I can add one comment here, just to add a bit of flavor to the answer to the question, what definitely is a massive trend, and I wouldn't necessarily say it's the successful integration of blockchain and AI, but in the investment space, I mean, every investor now in the Web3 space is asking every product, okay, you have the blockchain aspect, but where's the AI? So I think one thing that's also really important to keep in mind is, you know, you have the successful integration on the one hand, but you have the hype on the other, and so everyone is trying to pile these two together. So yeah, just wanted to put that on the table as well.
But I mean, there's also a lot of people asking, Lockheed Martin, we paid so much for the telescope, where are the aliens? So like, I'm sorry, it was not meant like this. But okay, when we go here,
I want to add some thoughts here. So AI itself is a GPT, general purpose technology. It can be integrated into a lot of solutions. But I think if we, one of the classical mistakes in the innovation world is called searching the problem with a solution. So I think the mindset shouldn't start with, okay, I have AI, I have a blockchain, and I want to use them together for the purpose of using them together. It should start with a real world problem, a problem that we can really add a value to the society at the humanity level. Then we go back to look at what are the most powerful emerging technology or any technology solution that we can use. Now, these days we have AI solution, but we can also call it generalized AI solution. If you understand the nature of how AI and the blockchain works, right? AI, it's an algorithm. We talk about computation algorithm, but you also need a data, large sets of data. One of the example is the large language model these days. You need a large set of data in order to train the model. You also need a GPU, computation power, right, to train this model. Now, blockchain itself, by nature, it's a ledger. It can record information. So if you think about how you solve the problem, especially I think certain use cases like healthcare, right? Financial data, it needs accurate data. So you can use blockchain to record the data, ensure data accuracy, and then record these data and use that data to feed into the AI model. So I think the way we're looking at a combination integration, whether you call for AI and the blockchain, is really go back to the real world problem and use the technology as an enabler to solve the problem and really revolutionize the society.
Thank you so much, because I was thinking like, how can I now go to the next question and follow up? Because exactly what you said was missing right now for making this transaction. And thank you. It's really good, because like when we speak about these problems, which you just mentioned in AI, basically the black box problem. We train AI, we have data in. I wanted to know from the panel if they think if when we train data, I mean, it can be used, blockchain, for a lot of things. And I would like to have some examples by training AI just to know what it is. But I wanted to know if we also can use correctiveness, like basically like a Harry Potter film when something was wrong trained, but we have it on a blockchain, that we can take this again out of the AI and fix it. And then, of course, the usage of AI about basically, yeah, can blockchain a little bit fix the black box problem in AI? Question for all.
I can start.
I can definitely. Oh yeah, I go for it. Go for it.
Okay. Yeah, I think the answer for me is absolutely yes. Again, it goes back to understanding the nature of the technology and how it fits in to solve the problem. Because a part of the thing we talk about, right, privacy issue, and also people do call it AI as a black box, right? I wouldn't say AI is a black box. If you understand how AI really works in your network, you need the data. So part of it, what we saw, and also in certain industry, we call garbage in, garbage out. If you have low quality data, right, your model will not produce the best outcome as if you feed in with the high quality data. So the blockchain, I think if we think about a large scale AI solution, the power of blockchain is really on the data side, data end. Data, recording high quality data, ensure accuracy. And also if we talk about the privacy, we should use encrypted data sets that remove those personally identifiable information in order to train AI. So overall, I think how blockchain fits into that is on the data side, use it as a ledger to record the data. And that feeds into the AI algorithm to predict, to produce better outcomes.
Nadia?
So I would add here, if we look at OpenAI, which arguably just based on public popularity and public opinion is, the hottest AI company around at the moment. The name itself, OpenAI, is a bit of a paradox because the training models are not transparent. And so I think the one thing about blockchain is the transparency. So if these AI models are informing our worldview based on the worldview that it has been fed, I right now as a human being, as an individual, I can choose whether to feed my worldview off of Reddit, for example. It might be that Reddit informs my opinions, or it might be that I stay away from Reddit. However, if I'm using AI models and the data that it gives me is not transparent, then I don't know what the provenance of that is. For me, that would be a massive problem, because now it's, this feedback loop where it might be data that if I were to make the choice, I would be staying away from. But because it's given to me by the AI and there's no transparency even about where the training models come from, that this might not be a worldview that I necessarily agree with. But because I don't know the origin, it's not something that I can really contest. So I think that's definitely something that I look at in terms of where blockchain could literally shine a light in terms of transparency, in terms of just showing the origin of a data. And if that's a data set that I might not agree with, that I can make different choices that at the moment I'm not able to make, because everything is very murky and I only look at the final product as opposed to how it came to be the final product.
William, when you hold your podcast, you have a lot of different guests. What, from your experience, you think are the most concern when you see it with AI? Is it about privacy of data? Is about the bias which AI gets from wrong learning? I mean, let's say Taybot or something like this, or it can. I mean, there were a lot of proof ups in training AI. What is the main concern? And also, or is it the simple concern for people losing their jobs to AI, or the futuristic concern from central AI destroying the world? What you see the most people, which are serious players, think? What is their biggest concern from your interview experience?
I think that the two biggest concerns you actually touched on in that question, you have the existential concern, which that's a whole conversation. We could dive into that, but I'm not sure if we want to take up a lot of time on the panel there. But then there's the other concern that you mentioned from a job perspective. So if you have AI out in the wild, which you do have now, then the people who use AI are going to be far more productive. And if you're a company, you're hiring and you're trying to expand and win a market, then you're naturally going to want to hire people who have the ability to leverage AI very effectively, because you're going to be able to keep your costs down, run your business at a profit, and build a very big company. Now, if you take a step back and you look at what happened, not just with the internet, but as society continued to go through the Industrial Revolution and get much more advanced, what did you see? You saw the average IQ needed to maintain a job within a more industrialized society become higher. So the average IQ that you needed to maintain a job that could functionally contribute to the society has gotten higher and higher as technology has gotten better and better. And I think right now you have this 0 to 1 technology with artificial intelligence. 0 to 1 in the sense that it is going to make some people unbelievably hyper productive if you're able to communicate well and utilize artificial intelligence in your work. And it's also going to make the people who don't leverage this technology fall really far behind. And so I think that it is a big worry. And there are a lot of people like philosophers, there are people out there on the government side, there are people who are, you see, building big companies in the space expressing the concern of how are we going to address these challenges as a society because the dynamics have completely shifted. And me personally, I'm not saying that I have the answer to how we reorganize society in order to solve this problem, but it's a problem that you're already starting to see percolate throughout just the decisions that businesses are making. But as the artificial intelligence, as AI tools and technology gets better and better, you're going to see this divide widen, and you're going to see certain companies that you don't need thousands of people to run a very high impact company if you have artificial intelligence tools. So I think that that is a big problem, but not as big as the existential risk problem if you prescribe to that being a real threat.
So let's speak a little bit about trust and transparency and blockchain. So David, do you think that blockchain really earned enough trust and transparency to convince us that it is the tool which should be used to basically help to train AI to make it more transparent? Or do you think there are other tools like certification and like peer review things, like, for example, like Wikipedia, how they manage their content without blockchain? What do you think there? Did blockchain really earn this trust so that it's superior?
So I think Linja made a great point earlier that it's really case by case specific. So rather than kind of top down deciding that something has to have AI and has to have blockchain and the two have to go together, I think the one of the kind of main attractions for a lot of people around blockchain is a decentralization component. And so really it does need to be more of an organic bottom up sort of an adoption that happens there. I think relatedly, so, you know, in some cases it will be a viable solution for some of these use cases. I know that the deepfake topic that Nadia was talking about there seems to be a lot of interest and traction in the blockchain community around kind of combining AI and blockchain specifically around that use case. But I think certainly that you know, there are other use cases where blockchain would be a terrible idea. I mean, that whether it's AI or not, I think it's, you know, important to make sure to have the right tool for the solution. You know, I remember a colleague was helping to develop some technology for a major financial organization, and they asked them basically for a blockchain solution for document sharing, because they had heard that blockchain would allow more privacy, et cetera. But when they wrote out the scope of work, my colleague told them, look, you're describing Google Docs. So you know, you know, you could build this on the blockchain, but why, sort of a thing, right? So it really does need to make sense for the use case, but blockchain can be viable. Kind of related points, or really more of a question for others in the room who may have more information on this. Speaking of a kind of questions around whether something makes sense in blockchain and AI. I know that there's been a lot of controversy around WorldCoin, to Nadia's mention of OpenAI, and to Linja's mention of personally identifiable information. Basically, they're having people around the world, and I believe at this point it's tens of millions of people, have done full retinal scans into these devices around the world in exchange for cryptocurrency tokens from this project that is let's say, at least affiliated with OpenAI, the creators of ChatGPT. So larger question of centralization versus decentralization. Is this the right use case for blockchain meets AI? That's, I think, still up for debate.
Yeah. Who wants to answer it? Lin Su, any comment to David's question?
Yeah, the way I think about it again is like in my current role, we always start with the real world problem, right? You cannot ignore that. And I think privacy is a big topic, a big concern right now. But there are a lot of, I think blockchain AI, to me, it's no longer a technology topic. It's a society level topic, just like every round of revolution. When new things happen, most people don't have the knowledge. So that I think that it is, if we want to develop, be socially, I'm kind of taking one step back, right? If we want to be socially responsible, I think it is the leader's role, the leading organization's role to think about the mankind, think about the common problem at the society level, and be responsible. In other words, I tell my team that if we develop a solution, even though people don't mention about privacy, it is our responsibility. We need to have a mindset about all the privacy issues. So AI and the blockchain itself can integrate, but again, depending on the use case, because the AI and blockchain are expensive. AI itself is very expensive, consume data set, sophisticated algorithm plus GPU computation power, right? OpenAI burns a lot of dollar every day. I know everybody knows about the numbers. And even blockchain itself, like David mentioned, the decentralized, it also consume a lot of energy resources. So if we don't use this powerful and expensive technology to solve a real world society problem that has value to the society, I feel like it's a waste of a lot of resources, manpower, social capital, financial capitals. So again, I think that it's starting with the problem and then identify the right solutions and integrate them together.
Thank you. Nadia, I see you like nodding in agreement to it. You have something to add?
Yeah, I mean, there's nothing that I don't agree with that hasn't been said so far. It's definitely an amazing panel. One thing that I would definitely add in terms of not so much a specific company, integrating both technologies, but really just if we zoom out a little bit and we look at the bigger picture, we live in the age of big data. And myself as an individual sitting here right now, there's this joke where they say you are not worthless because if your organs are harvested, you're worth quite a lot. So I want to kind of link that and say, as an individual sitting here right now, as a data point, I am worth a lot to a lot of companies out there. Everything that I like, everything that I ignore, everything basically that I do online is a data point that becomes a commodity, that becomes a product. Now, this idea almost of data cannibalism, where I am the creator of the data, I am the origin of the data, but then it goes through this entire loop and it comes back to me as the product that I am then the one to buy. Now, this is for me really where the entire, as David mentioned, the idea of decentralization in the blockchain space, the technology lends itself towards me, for example, being compensated. So A, the transparency of knowing what data is out there, and B, the ability to be compensated for it. Whereas in a world without blockchain and without this philosophical underpinning that believes in the empowerment of the average person, as opposed to the top-down approach of I am just a product, I think, that's really also a very important sort of combination of the larger picture behind the two technologies.
Sorry, I was just informed from a little problem with the live stream. I just had to look at this. So we see, let's go to this question. Is there any blockchain which is the fourth runner right now to be integrated in AI? Any blockchain which is the best one to be integrated in AI from its construction, from its ability? And then the last question would be how AI and smart contracts go hand in hand. So who wants to take the question?
I can hop in on this.
Okay.
So I think to address the first part of your question, I am of the belief that from the same framework we've been talking about this entire conversation is, okay, what is the real world problem that's being solved? And I think that when you compare Bitcoin to any other cryptocurrency or application of blockchain at large, that Bitcoin has achieved market dominance. And from a technology standpoint, has a lot more traction within the Bitcoin ecosystem. Now, when I say Bitcoin, I'm talking about the base layer, the base blockchain, but I'm also talking about the development that you're seeing happen on layer 2, layer 3 of Bitcoin. Now, going back to artificial intelligence, the big question that, and what I believe we've established agreement on, is the importance of training these models comes down to the data set, how you're transforming that data, how you're feeding that data into the large language model. And so I think that if you're trying to find and procure the best data source, and you want the most secure data source, and by secure, I'm literally talking about the computational power that you have securing the Bitcoin blockchain, then I think that there's no better application for you to draw reliable data from than products and data sources that are based on a secure base layer, which is Bitcoin. So I believe that in training these models, you have a lot of work that needs to be done. You have a lot of data that needs to be collected and then fed into these large language models. And I believe that there are going to be a lot of integrations between Bitcoin and artificial intelligence in the future, but it's still really early days.
Just piggybacking off of that a little bit, I think some other relevant related points are, personally, I think it's still too early to kind of identify kind of a single solution that's going to, in blockchain, that's going to guide AI, partly because I think it does depend on a case-by-case basis of what you're trying to accomplish. Also, though, because there's a larger question of whether you're looking to integrate AI solutions with a layer 1 smart contract platform or cryptocurrency platform, or with a layer 2 type of solution that's built on top of that. So to me, it's a somewhat multifaceted question. Beyond that, though, I think that apropos of competing for dominance, I think it's going to be interesting to see how cloud computing plays out. And Will might have more info on this in terms of his background in mining. But even right now, we're starting to see some of the cloud computing leaders, basically their bandwidth be kind of torn a bit between cloud mining for cryptocurrencies versus cloud computing for AI. So I think there are some situations where there could be, there can be synergies, but there are other situations such as cloud and mining where there could actually be increased competition. And also, use cases that, related to a previous point, use cases that might not make sense or that might be high risk, such as, for example, using AI for trading of digital assets. At this point, is still early days. We have an unproven technology of AI trading with an emerging market of digital assets. We have seen already some total wipeout scenarios there. And we have also seen scenarios where AI trading bots have made a $200 million paper trade to earn $1,000. So the risk reward ratio is not there, where they're risking losing $200 million to earn a couple of $1,000s. So just I think a couple of related spots around which I think it'll be interesting to look out in the future.
I think you're on mute
Cole,
there.
you're on mute.
Thank you very much. I think we have 2 minutes for closing remarks. Please, everyone takes a short moment because we surely missed some things. And now I can disclose every question which you were asked was not human generated, it was ChatGPT. So it was
on brand
prepared,
for the AI.
It was
AI
prepared
discussion.
by AI as an experiment. So we surely missed
So now
something.
we have to say that every answer we gave was also generated by ChatGPT.
Oh boy.
So,
Actually,
please,
this
go
isn't
ahead.
me. I'm
Yeah.
I'm a deep fake. This is my virtual likeness, so I'm not really here. But yeah.
Please, final remarks. Let's start with sorry, I always pronounce your name wrong. Sorry?
Linja,
Ling.
Linja.
Yeah, so I
Linja.
apologize for this.
No worries. I think we're going into the human and computer or AI interaction age, right? Where the AI can replace the repetitive work. So I think it's a release a lot of repetitive, low intelligence work from us so that that empowers us to focus on more sophisticated, creative thinking, imagination, more sophisticated work. So I would think and I would hope that we can use the emerging technology in a more productive way and really to lift to the level of productivity at a society level and push the humanity forward.
Okay. Nadia?
Well, a question that I get asked all the time when I say that I'm working on a documentary about the future of the internet and the evolution of digital self is, oh, so you think Terminator will be real and you think that we will all be cyborgs? So I think for me, this is such a critical moment in the future history of our species, where we can go, you know what, we can take this journey down this pathway where technology completely runs away with us, and AI does have the possibility to do that. Or we can also look at how we are able to empower ourselves as average people, as average users of the internet, through, the incorporation of a technology like blockchain. So I think this is a very critical moment. And if you are here and you are listening to this, you are part of a very, very early but critical point in the history of the species where we can go, right, we have the power now to go left or right. What are we going to do?
William, thank you very much. Nadia?
Yeah, I'll just leave on a quick positive note that if you're listening to this, you are way ahead of the curve compared to most people out there. There are some people that still haven't even played with these models yet. And right now you're in a time where you have an unbelievable asymmetric opportunity. You're very, very early to a trend that is going to affect all of society. And so go play around with the tools, learn about it. And the final message I'll say is just thank you to everyone on the panel. This has been a lot of fun. Thank you for having me. And thank you for putting on such a great event.
David, thank you very much, William. David, final remarks?
Yeah. So briefly, I would say that to a previous point, I think is
joking.
And that was it. Yeah. Case by case basis. So I think that, it really is going to depend on what's happening. I think, again, that Linja's point about, there needing to be a real fundamental value and utility to these relationships is also very important. And then to Will's point about asymmetric opportunity, I think that in a broader spectrum, that is the case. But individually, each of these, AI companies, blockchain companies, et cetera, given that they're both emerging markets, the companies themselves, as well as the use cases being involved, are still early days, and thus there are risks that need to be analyzed on a case by case basis. And there are, in any emerging market, there's also the higher likelihood of scams. So while there is huge opportunity, it's also important to do your own research, to analyze risk, and to seek kind of consensus on utility and fundamental value.
Okay, thank you very much. We have now our next speaker coming in, and I thank all of you for a really interesting and informative panel. Thank you so much.
Thank you.
Thank you.
Thank you.
Thank you. Delia? Hello, Delia.
Hello, hello. Hold on a second. Let me adjust. How are you?
Fine, how are you?
Good. Nice
Hi,
meeting you.
Delia. So you're live. Thank you very much for joining.
I'm live. Let me see if I can share my screen actually before I go live. In case I'm
You're live already. Sorry.
okay. There you go. No worries.
David, you're
Post
still
disable
on.
participant screen sharing. So you need to disable the screen sharing for me.
I have to enable screen sharing. 1 second.
Yes, as host disable participate screen sharing.
1 second. Okay, I gave you co-host permission. Now you should be able to screen share.
There you go.
So may I introduce Delia first?
Sorry?
Oh. May I introduce you?
Of course, of course.
Okay.
Please.
Delia
Please,
works
please.
with CKC Fund. She is a former fund administrator from BlackRock. She had over $2 billion under management and a really impressive resume. Like, I don't know where to start, from schools to everything. So can you tell a little bit about yourself before you go in the presentation?
Oh my gosh, thank you so much for the introduction. Yes, hello everyone. So I'm Delia Sabau. I'm the head of portfolio and risk management at CKC Fund. So I spent the last 20 years in the financial service industries, starting literally from banking, consumer credit, and then going into the asset management and hedge funds. Starting at BlackRock first, the equity research, and then managing the US hedge fund. And later on, I moved to a smaller hedge fund where I manage more global institutional funds. So yeah, that's kind of in a nutshell what I did as far as my experience. I'm really excited now to be at the CKC Fund, and yeah, so I think we have a really nice presentation. Hopefully, everybody's going to enjoy. I think it fits perfectly with the prior panel discussion. So let me just go through this. So yeah, so over the next half an hour, we are going to explore the intersection of AI and the digital asset space. Specifically, we'll explore the various cases of AI in the blockchain ecosystem. So both blockchain and AI are changing the financial industry landscape. So AI can process data exponentially faster than humans can. And it also allows financial institutions to leverage vast amounts of data to extract more insights and automate repetitive tasks. On the other hand, you have blockchain, which is also disrupting the financial industry with more transparency and access to financial markets through decentralized finance, or DeFi, and the smart contracts. So as more decentralized autonomous organizations, or DAOs, are launched, the more we'll be forced to rethink the existing of centralized financial systems. So what do blockchain and AI have in common? Not much, actually. They're both leading today's technology innovation, and that's why you hear about both of them right and left. They have each of them many use cases, but otherwise blockchain and AI act entirely differently. As you could see from the slide, blockchain acts as a secure storage and is decentralized, tamper-proof, and transparent. And AI, on the other hand, is the processor of massive amounts of data and is typically centralized, fast-evolving, and opaque. So while blockchain struggles with scalability and efficiency, AI struggles with transparency and privacy, which makes the two technologies the perfect match because each can address the other weaknesses. So blockchain provides the trust, privacy, and accountability to AI, while AI provides the scalability, efficiency, and securities. So combining blockchain and AI can allow for synergies in both scale and efficiencies. So currently, there are a handful of AI use cases in the blockchain ecosystem. However, it's crucial to note that we are still in very early stages of development and more work needs to be done for a widespread adoption, especially regarding the use of AI in the blockchain applications. So if we divide that by sectors, within the DeFi sectors, we have seen AI being used to augment the smart contract audit process, facilitate trade automation, and be paired with predictive analytics for more accurate forecasts. In the NFT and the metaverse space, AI has enabled generative art creation, allow for intelligent and interactive NFTs, and provided tools to improve metaverse experience. And on the other hand, DAOs, which are the decentralized autonomous organizations, have also integrated AI to improve manual DAO operations. They're using autonomous agents to act as delegates for token holders and using AI to power the central AI smart contract. So this is not an exhaustive kind of list of use cases or projects utilizing AI in the digital asset space, but it serves as examples of how those technologies have been adopted today. One other thing I wanted to add here is that the mention of specific projects does not constitute endorsement or recommendation by the CKC Fund. Please do additional due diligence to better understand the project and associated risks. Okay, so with that behind us, let's go over some use cases. So the first use case is smart contract audits. So smart contract audits involve, as many of you know, a comprehensive inspections and analysis of smart contract codes to identify potential vulnerabilities in the system. So audits act as preventive measures for projects across all sectors of the blockchain ecosystem. They're especially important for DeFi projects, given the amount of funds secured in smart contracts. So we hear a lot about hacks right and left, especially last year, and they all, or most of them, have happened in the DeFi space. So AI can be used to augment the smart contract audit process. So for example, AI tools can be used during the initial screening stage to analyze the code and identify potential red flags. So essentially what AI does, it can serve as an additional pair of eyes in the smart contract audit process. So as a case study, let's look at ChatGPT, which is a large language model developed by OpenAI. I'm sure that everyone here heard about them. So now, on the other hand, you have zCasino, which is a decentralized betting platform, and it used ChatGPT for pre-audit, while using CertiK, which is one of the top blockchain security company, as an auditor. So ChatGPT correctly cited several common security concerns. However, it failed to identify certain serious security issues that CertiK pointed out, as you can see from this table. The next use case looks at the intelligent trade automation. So DeFi offers traders plenty of trading opportunities. However, monitoring positions 24/7 is difficult and time-consuming, especially during times of market volatility. Consider now a scenario where you can engage an autonomous agent to monitor your positions, manage risk, and take profits based on rules you set. So of course, you'll tell me that trading bots are not new, but additional features and more sophisticated tools are getting increasingly possible with the development of AI and the integration with the DeFi dApps. And this is where the AI could actually add value in the future. So let's look at the case study here, and let's look at the Fetch.ai, which is a decentralized platform that combines AI and blockchain technology to create intelligent and autonomous agents that can perform a wide variety of tasks, from simple data analysis to complex machine learning algorithms. So one of the earliest dApps deployed by Fetch.ai's technology was BotSwap. So with BotSwap, users can create autonomous agents to manage, protect crypto assets by responding quickly to excessive impairment losses, which we all know it's a huge problem in decentralized exchanges in the DEXs. So for example, liquidity providers can define a trigger price for a token pair, and if breached, the liquidity is automatically withdrawn from the pool, eliminating any potential loss that you can have.
Julia,
Yes?
you were frozen for a moment.
Oh, is my internet? Am I good now?
Yeah, now you're good.
Okay, sorry.
It's a little choppy. Maybe try turning your, well, no, it still was a little choppy.
My video. Is it okay if I stop video? Let's see if that works better.
Might be.
Okay. So let's try. Carl, please stop me if it's still choppy. So the last use case for the DeFi sector looks at predictive analytics. So predictive analytics uses data, statistics, and machine learning techniques to identify future outcomes and forecast trends. So on pair with AI, it can help analyze large amounts of on-chain data to predict token price movements and automate trading. So price predictions can also be used in DeFi projects, such as over-collateralized lending protocols or stablecoin projects, and they can adjust the collateral ratio and maximize capital efficiency. So this will also prevent cascading liquidity risk during market crashes. So an alternative case that I'm very passionate about could be in the risk management, where historical data is identified is used to analyze and identify risk patterns. So in this case, AI can rebalance the portfolio or provide suggestions to mitigate potential risks. So in this case, let's look at Ocean Protocol, which is an ecosystem of open source data sharing tools for the blockchain, where users work with data and build AI models or simple machine learning models. So with that, those models can be monetized and sold to users who can use the data for their intended purposes. So now let's move into the NFT sector with the first case study that looks at generative art. So several NFT projects have utilized AI to create generative art, which is achieved by putting in place a set of rules or constraints, such as patterns, colors, shapes, and the AI will generate the artwork based on this framework. So a case study here is Autoglyphs, which is a generative art NFT project that was launched in 2019 by Larva Labs, the creator behind CryptoPunks. So each piece is unique and created by code running on the Ethereum blockchain. The art is stored inside the smart contract of each NFT, And you could actually see some of the art samples here on the slide. It looks really cool. The next use case has a huge impact in the gaming industry by elevating NFTs with intelligence and interactivity. So imagine being able to turn your static NFT into an intelligent NFT or INFT that can communicate, that you can communicate with, and it can respond to you. So in essence, an INFT brings to life the underlying NFT by using the generative power of AI. So INFTs can analyze data to learn and evolve their personality based on real-time interactions. So AI enables the INFT to absorb new metadata and shape its future interactions and personality. So this can have profound implications for Web3 gaming and the future of metaverse, where in-game characteristics are significantly more interactive and conversations become more lifelike. So the example here is Alethea AI, which is the R&D company building at the interactions of generative AI and blockchain. It is developing a decentralized, intelligent NFT protocol that will allow anyone to create INFTs that can be used in dApps on the protocol. So for example, here, Alethea AI team has created a metaverse called Noah's Ark. And INFTs can be created by fusing a personality pod with the NFT. So personality pods are ERC-721 assets that represent the on-chain personality traits and intelligence level of the INFTs. The last use case for the NFT sector improves the metaverse experience. So AI has the potential to significantly improve user experience in virtual worlds by creating a more interactive and immersive environment. So through the use of voice AI and natural language processing, AI enable non-player characters or NPCs to act as chatbots to engage and communicate with players in a more realistic manner. So this is not a new technology, and we are all very familiar with this through the use of kind of Apple's Siri or Amazon's Alexa. But there is another new component at the metaverse experience, which lies with the visual aspect. So this lifelike digital avatar that can mimic physical traits and movements are also possible through the AI models that scan the 2D and the 3D images to create them. So in this case, Sophia's Age of Singularities, or SAOS metaverse, actually is a very interesting project. If you haven't heard about that, please take a look and read a little bit more about that. So it's a project built around Sophia, which is a social robot powered by AI. So with a human-like face, Sophia has conducted one-on-one meetings with leaders of 17 nations, appeared on the cover of 10 magazines, become the first robot passport holder, and has filed 12 patents. And think about it, this is just the beginning. So now let's move to the DAOs. This is the last sector that we are going to cover. So here, I like to kind of give some examples of how AI can revolutionize this sector. So the first use case here looks at ways to improve the DAO operations. So running a DAO can be operationally challenging and involves many tedious tasks. So in a DAO study conducted by Bankless, it was found that 62% of DAO's members' time was spent on keeping the lights on activities, such as creating marketing material, summarizing governance decisions, and producing educational content. So AI enables DAO members to spend less time on tedious tasks and focus more on the strategic purpose. So by using, in this case, DAL-E for DAO marketing or graphics, and using ChatGPT for governance proposals or summaries, DAO contributors can end up spending more time focusing on creating value. So overall is a net benefit for everyone because people will get to work in more fulfilling roles, even at the very early stages of their careers. So this picture here was created on DAL-E as a marketing content for one of their DAOs. The next case looks at the creation of autonomous agents that act as token holders. So decision-making within DAOs should be democratic and decentralized. This means that every member of a DAO has a voice. However, a 2022 study on a few of the largest DAOs shows that average engagement per proposal averages under 5%, 5%. So the lack of voter participation within DAOs not only limits the efficiency of decision-making within the DAO, but could serve as a potential centralization risk if only a small subset of the DAO's members engage in the voting process, right? So by having autonomous agents that act as delegates for token holders, voter participation within the DAO can increase and the speed of decision-making can actually accelerate. So in this case, we're looking at Valori, which has an app which is called Governator. I think I pronounced it correctly. Where DAO members technically no longer need to read the governance proposals or even vote to engage in their DAO's governance process. So instead, the members can use governators to delegate their governance tokens to a governator address. So after that, they can decide whether they want governator to vote in a way that is can be often aligned with a consensus, or in a way that can often goes against consensus. So with the use of the AI, the app can actually learn your voting style, and then when new proposal arise, the governance tokens will be allocated on behalf of the DAO members accordingly. Please keep in mind, this is very, very early in the developments, but it has huge potential in democratizing and decentralizing the current DAO governance. The last use case I'm going to talk about is using AI at the center of a DAO. So the central smart contract of a DAO services at its technical backbone. Especially the smart contract defines the rules of the organization, holds the DAO's treasury, and spends DAO funds accordingly to DAO's members' decision. So with the integration of AI, the DAO central smart contract can consume resources, provide recommendations, and make decisions. So in this case, we looked at Singularity DAO, which is a DAO that uses AI to allocate assets and manage the portfolio of token holders. So the main purpose is to govern its native crypto product, which is the Dynasets, which are the baskets of crypto assets that are managed via AI models. So in this case, token holders can stake the DAO governance token to participate in decision regarding the configuration of the training of the AI model, managing those Dynasets. So I should make a note here that Singularity DAO is not the perfect case study for a DAO with an AI-powered central contract, as the governance and the decision-making of the DAO are still manually controlled by humans. But this one is the most advanced models out there. Now, integrated AI in the digital asset space opens up huge possibilities regarding potential use cases, and of course offers alternatives to existing solutions. However, it is crucial to note that while the concept use cases may seem very interesting, AI and blockchain projects have generally not achieved widespread adoption at this moment. So the relatively low level of adoption suggests that such projects may be nice to have, but not absolutely necessary right now. So however, emerging technologies, as we all know, take time to develop, and with time, we'll likely be able to iron out all the problems and all the frictions. So to provide some perspective on those possibilities, I thought I should leave you with some quotes from some of the blockchain leaders. So the first one is coming from the founder of Near Protocol, talking about personalized crypto applications, which will be the result of combining open source code with generative AI capabilities. Next one comes from the co-founder of Sandbox, which emphasizes the impact of AI in metaverse, especially on the cost-cutting side and ease of new developments, which removes the need to create every aspect of the metaverse environment. Last quote comes from the founder of OpenOcean, which looks at the future of DAOs and how AI-powered smart contracts would communicate with each other, allocate resources, and make management decisions. So that's all I had for today. So I hope you enjoyed the presentation. Thank you very much. Please feel free to reach out to us if you have any follow-up questions. You can find us on all social media channels. And you can also, let me turn this on, and you can also find me on LinkedIn or Twitter, or even by email at delia@ckc.fund. Thank you.
Excellent. Thank you for a great
you
and
very much,
informative
David.
presentation, Delia.
Thank you. Okay, David, you have, oh, I'm on mute.
No, we can hear you.
Ah, okay, then my camera is off. Something was wrong. Okay. So thank you very much, David. It was really interesting. So David, you have now a panel. I will give it to you and go on mute and just admit the people. Okay.
Sounds good. Alrighty, so it looks like
Okay.
we have Philip join. Hi, Philip. How are you?
I'm doing well, David. How are you?
Doing well, thanks. And I think Joshua Ashley is trying to get audio ready. So. Great. Hi, Joshua Ashley. Can you hear us?
Yes, I can. You can call me Josh.
Oh, okay. Josh makes it easy. All right. So, and I think we had one panelist that actually asked to switch to a different topic. So, Carl, if you wouldn't mind, perhaps you could host this one. We could have a kind of a four-way dialogue here. Perhaps not. Okay.
Hi,
well,
David. Sorry, I heard you speaking. Sorry, I was just on the call for my next panel. What's going on?
Yeah, so one of the panelists asked to switch to the next. So maybe if you could join us as moderator, we could have kind of a four-way dialogue here.
Four-way dialogue. Oh, okay. Well, I'm not even prepared for this panel. Can you make it as a round table?
Yes, roundtable discussion sounds great.
Better. Okay.
Cool. So,
Sorry.
yeah, alrighty. Poof, it's a roundtable. All right.
Okay, it's a round table. I'm sticking
my
in
magic
and
powers.
just like to help out once I go
Okay,
live.
yeah, sounds great. Cool. Well, yeah, maybe just first off, briefly, thank you again, Josh and Philip for joining, and glad you could take the time to do that. If you could please just introduce yourselves for those who might not know you. Josh, perhaps you could kick us off.
Hi, hope everyone's doing well. Thanks for having me. I'm Josh Clayman. I'm U.S. Head of FinTech and Head of Blockchain and Digital Assets at Linklaters, which is a global law firm. And I'm also one of our global tech sector co-heads. Outside of the office, I also chair the legal working group of the Wall Street Blockchain Alliance, and I'm on its board. And I'm on the board of Wharton Cipher Accelerator. So I'm very passionate about this space.
Awesome.
Oh, and I'm based in New York.
Right on. Well, and Philip, how about you?
Yeah, so I'm Vice President of Legal Affairs and Assistant General Counsel for JP Morgan Chase & Company. And prior to that, I've worked at several law firms doing international work in the private funds and private investment space that touch on everything from real estate to energy to everything under the sun. And that would include investments in the digital assets, cryptocurrency space using blockchain. Published several articles about the intersection between legal affairs, regulatory interests, and the applications of blockchain technology in business and industry. And as Josh said, we're very happy to be here. I'm looking forward to a conversation.
Excellent. Yeah, glad you can join. Right on. And then just to briefly introduce myself, so I'm David Doss, and I'm the founder of CKC Fund. And we're pleased to be sponsoring Digital Davos with this seminar and the events in Cayman that are also happening today. And thanks to Carl at ChainVLX for organizing this. And in terms of my background briefly, so I have spent about the last 6+ years in the blockchain and cryptocurrency space. So, I mean, for an emerging asset class, that's a solid while here. Worked on blockchain and crypto initiatives with Citibank, Gemini, and various other players, great and small, in the space. And currently leading CKC Fund, which is a fund advisor operator focused on digital assets. So with that, glad that we have two lawyers in this talk about crypto and the SEC, because it's I think a fairly nuanced topic that a lot of people have opinions on, but I think it's also good to have some informed opinions from a legal perspective here. So to kick things off, maybe we can start with Philip. What do you think are some of the key concerns that the SEC has regarding the regulation of cryptocurrencies and how they might impact the industry?
For sure. Seems like a really great jumping off point. A lot of what the SEC has said over the past decade as it relates to digital assets mirrors quite a bit what they look at when you think of more traditional assets. And so things like investor protection, market manipulation, concerns with regulatory compliance and filings in order to have that kind of transparent look at what the average investor might be investing in are all up there as far as priorities for the SEC, specifically when it comes to enforcement. And when they've taken a look at aspects of the digital asset space, they tend to focus on things like ICOs with the initial coin offerings. And do they look like securities offerings? Are they falling under the lens of a 33 or 34 Act requirement? And then they're also looking at the cryptocurrency exchanges themselves. As you may be aware of, with the recent actions taken by the SEC against Coinbase and Binance, they're really taking a look at participants in the exchange space of this industry and looking at whether or not they are selling unregistered securities, operating as an unregistered broker, or combining a lot of functions that we normally like to see spread out between different players and operating at an arm's length basis. And then on top of that, you have kind of the traditional concerns with cybersecurity, as well as things like AML compliance. If you recall, in the early days when Bitcoin was making waves, a lot of government officials were concerned with Bitcoin being used as a way to circumvent AML controls or allow sanctioned investors to invest in things that they shouldn't be allowed to and move money around on behest of some really shady organizations. So that's always been a concern for the SEC, and that's definitely come out in the past decade of enforcement actions as well.
Points. So it's a related question for Josh. So speaking of some of these concerns that the SEC has, and then thinking across a global context, and both of you have a pretty global background, so you may both have some thoughts there. But Josh, what do you think about kind of how the SEC's concerns are similar or different from some of the other major regulators around the globe? I think in particular, for example, thinking through EU and European regulation with MiCA upcoming, as well as some of the regulatory progress, as well as concerns that have been happening, for example, in Hong Kong, China, et cetera.
So thanks. So that's a pretty broad question. I guess the way I would first start to address it is to say, I agree with what Philip said. And I think some of what the SEC focuses on, right, is disclosure and also conflicts of interest, right, for their investor protection emphasis, which is one of their twin prongs, right? They also have capital formation, which sometimes seems to be getting lost a little bit, if I do say so. And I think, though, this concern about disclosure and self-dealing or conflicts of interest, I think that's probably pretty common across regulators. There's just a different, and across the globe, I would say, probably things like MiCA, which is meant to address, having good markets, right? And I think this kind of transparency and this kind of understanding that we want to have market integrity, I think that probably flows across a lot of nations, perhaps not all, right? And there are different types of setups, different types of regimes in the world. But I think that the SEC does have in common. Now, its way of addressing it often is quite different. This is because, and this comes up all the time in practice with my colleagues, because sitting in different jurisdictions, we may be advising a client. It could be a bank, it could be any type of entity or person, right? And we could say, okay, so in Switzerland, we think we're pretty comfortable that this fits into this category. And in the UK, we're comfortable with this. And in Singapore, we're comfortable with this. And in the US, we always have to say, well, wait, how was it offered? How was it marketed? How was it sold? It's really a different set of questions that are being asked. And I think that's where a lot of the differences are coming in. And that's why I think the industry, in many ways, although we do have a large body of relevant case law, depending on which way you argue it, right? SEC is arguing it one way, and certainly those in industry often are arguing it a different way. But contrast that with other jurisdictions that may have more bespoke legislation or bespoke, other types of sandboxes or other situations where the industry may say, oh, that looks a lot more clear. That has a lot more certainty.
That makes sense. I think, yes, most of us want better markets. Yeah, that's I think something we can agree on. Well, so to Josh's point, Philip, if we're talking about some of these changes that the SEC, if the stance of the SEC continues to gain traction within the US, where do you see this for other jurisdictions, and where do you see this potentially for the broader blockchain and cryptocurrency market in terms of I guess if we continue to go down this road in the US, what will the potential impact be globally is the basic question.
For sure. I think one of the first main considerations that you have to take into account here is that everywhere else in the world, regardless of what they think about it, watches what happens in the United States. Globally, the SEC is probably one of the most powerful regulators on earth because it regulates investments and transactions in the world's most powerful economy. In private markets, something that we see all the time is, regardless of where in the world you are, when you're wanting to tap into the largest market where capital is available for investment, you come to the United States, and then Europe and the EEA is secondary to that.
Excuse me for quick interrupting. I have Don Cutts in the waiting room. Should I admit him?
So Don was for the next panel.
Okay,
yes, was promptly there, so that's good.
Sorry.
Please continue, Philip.
Sure. So whichever direction the SEC ends up taking, and not just the SEC, but also in terms of commodities, the CFTC, and then in terms of criminal investigations, what their Department of Justice ends up doing, that's going to have repercussions worldwide, because people are going to look to the United States, look to what that body of law developed as, and go, okay, this is what they're doing in America. This is either what we need to mirror if we want to get that type of investor in our products or that type of investor in our industry, or this is what we need to do differently if we want to take those who might be excluded in the United States or feel pressure in the United States and bring them into our industries instead. And that's where you get kind of the second point, which is markets, I think, that are going to look at attracting the same type of investor, the same type of business, the same type of portfolio holdings are going to want to mirror what's happening in the United States, and may not be as aggressive at setting their own rules, but more responsive in terms of what they first see happening in the United States, and then they develop their own laws accordingly, versus market participants who really want to differentiate themselves from the United States and maybe scoop up the people left out of what's going on with American markets. They're going to be looking to be more proactive and more inviting, whereas US markets may stymie that a little bit because of the regulations.
Yeah, that's an interesting point about where things will happen in terms of our potential arbitrage country by country versus potential kind of leader follower scenario. So it might be a bit of both depending on the jurisdictions. So, well, and Josh, to Philip's point about here's what we need to be doing differently, I think that's a question that, to kind of turn it to the opposite side of the spectrum, I think a lot of people in blockchain like to talk about what they think the regulators should be doing differently, but ultimately this is a two-way street. So Josh, you're in the kind of the trenches here of working with a lot of blockchain companies on some of these organizations that you've mentioned. What do you think are some of the top things that people in the blockchain industry need to do differently versus on the regulatory side?
Sure. Actually, is it okay if before I answer that, I just tag something on to what Philip said from before?
Go for it.
Okay, so I think as we think about some of the globally harmonized laws or the overarching laws that are being talked about, whether it's recommendations from the FSB, the Financial Stability Board, right, or IOSCO, or when we have the G20 heads of state, and there's going to be an IMF FSB report for that. We have to remember, like Philip was saying, our US regulators play a huge role in those. And if you actually look at the most recent FSB reports, some of them echo things that the SEC has been saying, including concerns about market participants playing multiple roles and potentially having conflicts of interest. That was actually in one of the explicit recommendations focused on that. And I think it's important to note, like the IOSCO report that's in the works, right? My understanding is that folks from the SEC are actually the lead drafters of that. So just as we think about, it rotates for different things, but I think it's going to focus on DeFi. That's my understanding, right? But as we think about what's happening throughout the world, I think just as Philip said, yes, you can stay out of the US. We can help you as practitioners, to stay out of the US somehow. But the US does have not just an extraterritorial reach, but also just a reach of influence. And some of the influence you might not even realize is being influenced. So I would say in terms of what the industry should be doing, I think it really depends on whom you talk to. Right, I have to answer this a bit delicately, right? Because there are some of us who are lawyers advising clients on, okay, here's what you should do. Here's what we think the regulator thinks, right? And if you want to stay out of the regulatory crosshairs, here's what we would recommend you do, okay? And so that may involve, in certain instances, if you're going to do a capital raise, most likely, if it's going to involve a token, not legal advice, not investment advice. These are our personal views. This probably applies to all of us, but it's highly likely that I'm going to say that looks like a securities transaction to the SEC, and therefore likely we should treat it as a securities transaction. Now, if you are in a different stance, right? Say you're a litigator and you've got a case right before you, you may be taking a different tactic because at that point, you already are in the regulatory crosshairs. And there you're looking to say, what can I prove in court, right? What can I get a judge to agree with? What do I have the strength of, of the historic cases? Or where can I say, as folks are doing now, actually, SEC, this question is something that Congress is focused on, right? And not the SEC. So I think these are very different kinds of questions. And then, of course, there's other questions about how should we, as an industry, be communicating with and trying to, educate and request action by legislators. So I would say on that latter point, certainly there are lots of efforts right now to mobilize folks, and there has been great outreach by the industry to legislators. I would say in the other two instances, seek good counsel, right? That's probably the number one piece of advice that I would have for the industry is this is complicated stuff. Things are being decided day by day, and the cases that we see in the headlines, whether it's involving trading platforms or issuers of digital assets, whatever it is, each decision at each stage of these cases, whether it motion to dismiss or summary judgment or some other interlocutory appeal, just to name a few different things we've seen, all of these are having an immediate potential effect on all of the other cases. That's why I think staying close to, I'm not doing this as a plug for lawyers, but I think it is important as we've seen the ground shifting under our feet even over the past few weeks, that you seek legal advice.
Makes sense. Well, and so thinking through, what players in the blockchain space can be doing to kind of adapt to regulatory shifts. Philip, wondering what your perspective is, from the kind of large institutional side, for example, Chase and other kind of, institutional banking players. Where do you see some of these kind of the bigger dogs here making adjustments or potentially kind of preparing to make adjustments in reaction to what's been happening on the regulatory stage over the last few months?
Yeah, so kind of as Josh was saying, one of the curses to having a common law legal system is that things aren't prescribed in stone, set in stone, that everybody can just look at, flip to a certain page and find an automatic answer for everything under the sun. It doesn't work that way. And because financial markets dealing with digital assets is something that's relatively new when you compare it to traditional finance, the law isn't really settled in this area yet. I mean, you even have, July of this year when the Ripple case, when the initial order in that from the district court came out, basically blowing apart the SEC's whole case, except for one point that looked a lot like traditional finance. And then you had everybody at Coinbase and Binance celebrating, even though you had another judge in the, I'm blanking on the case now. But there was another case decided.
Labs, SEC,
yes, exactly. Where the judge came out and said, I get that this ruling came out, but I don't think it's right. And it's setting itself up for interjurisdictional contradictions, which automatically get escalated on appeal. And then that'll allow potentially a circuit split, which then has to go to the Supreme Court. And then you're looking at Howey 2.0. So it's really one of these instances where what the law isn't known to the regulator, it's not known to the courts, and therefore it's not known to the market. It could be this, it might be that, it looks like something else. And that's why it's very important that when you're positioning yourself either as an investor, as an issuer of digital assets, as a financial services company that might look into offering digital assets to your clients, that you're really paying attention to the developments in the space and appropriately marking those risk factors in any type of offering materials that you're providing. Something that catches a lot of people off guard is when they're not appropriately disclosing the risks for an emerging market trend, something shocks that market, and then your investors come back to you and go, well, you never warned me about this. You never said that this was a possibility. You never told me the law wasn't settled or that the regulator would pull a total 180 and start coming after us. These were all material concerns that I would have not given you my money for had I known. And so even from just a business relationship standpoint and a professional reputation standpoint, you want to make sure that in any type of offering materials as a digital asset provider that you are providing to potential investors, to potential partners, to potential sponsors, that you're disclosing these risks appropriately and that you yourself are staying on top of that, whether that's engaging competent legal counsel, whether that's engaging public policy monitors, whether that's making sure you're reading the financial press, that you understand that this is a dynamic space and things are changing daily. So you can't just say, this is the direction I'm going to steer the boat in, and we're never going to adjust course, because you might just be running straight into an iceberg.
Got to avoid those icebergs. So you mentioned Howey 2.0, which I think is a really interesting concept. So, I mean, I, for one, would say, I like to say that that crypto, digital assets are special, just like any other asset class, where ultimately, there are very specific considerations in blockchain and crypto, just like there are, specific considerations in real estate or in securities or treasuries. But at the end of the day, they are all assets, potential financial instruments, et cetera. So, but to that point, so thinking through a potential Howey 2.0 and what that might look like, I mean, just looking at kind of the environment from which the Howey test was birthed, really looking at almost 100 years ago, some of this regulation that started to kind of set in motion in the wake of the Great Depression. So how much of this, and it's probably would be great for both of you to weigh in. Let's start with Josh. How much of this do you think is going to stay the same versus where do you see kind of a 2.0 what would the term be, update, let's say, where would you see potential areas where an update might be needed?
Wow. So I think if I just give a little framing, so there have been cases after Howey, right? Like people often say Howey and its progeny, right? So that's why we're sometimes like saying solely
son of Howey.
Really, yeah, exactly. Okay. Based on the efforts, right? We have had refinements over time. And so I think to the extent that this does become a circuit split or it does otherwise end up at the Supreme Court, I think this, to the extent it is Howey 2.0, I think it would be potentially focused on one of the questions that's on a lot of people's minds, which is whether the investment contract is embodied in the token, as the SEC is arguing, or whether the investment contract is kind of this sleeve through which the token arm goes, right? And it's a sort of weird analogy, but that's how I'm envisioning it right now. And I think that that's something where if it were to be decided at the Supreme Court level, if we look at, for example, Coinbase's motion for judgment on the pleadings, I think we can sort of see the ideas taking shape. For example, there's a focus on this idea that, guess what? Although the Ripple court, Judge Torres had rejected Ripple's argument about an essential elements test, right? They said Howey doesn't say that, right? That's an additional thing. What Coinbase has argued actually is that's part of Howey, right? The requirement for the written contract, that's part of Howey. And they cite to things like Black's Law Dictionary saying that a scheme is a document, right? And looking, like taking account of some of the language of Judge Rakoff in the Terraform Labs Do Kwon judgment that came out for the motion to dismiss, which was declined, right? Which was denied. And so I think that is a place where I think there will be a lot of focus, is this idea of, number one, can you have an investment contract without a writing between the parties? And number two, okay, so you have an investment contract. Is that the offer and sale and marketing, right? And not embodied in the token? I think that's something that many reasonable minds disagree on right now. The SEC and some out. Yeah.
Interesting. And Philip, what do you think on that note of the kind of Howey and its progeny?
Yeah, so I mean, this isn't as much of an answer as it is throwing another question into the mix. But when Judge Torres kind of issued the ruling in the Ripple case, they expressly declined to talk about secondary sales. And that's huge because in the securities business, initial offerings are almost always followed with a secondary offering, whether you're talking in the public market space and even in private markets like private investment funds. The market for secondary sales of securities is huge. So if we already have courts that are trying to establish this is what it looks like in an initial offering, but this in no way touches on what it looks like for a secondary sale, that's just another question that isn't being covered right now, but that is a huge element to the market. Because how are you supposed to market, assuming that you're marketing a security, how are you supposed to market a security to investors and tell them, you know, your access point to liquidity here could be a secondary sale, but we don't know? That's not a lot of confidence. That's not going to excite people to buy into something. So even apart from the initial considerations defining further, you know, is the investment contract a scheme that must be in writing? And then you throw questions into the mix. Does that depend if both parties are sophisticated parties versus one is a sophisticated party and the other is just a layman consumer? These are all the types of questions that have to be answered, and nobody really has any good answers for it yet. We can look at, again, to traditional finance and Howey and his progeny and try to piece together some best educated guesses, but nobody really knows the answer yet. So until we have more established case law and judges repeatedly articulating what they believe a test might be or what the elements should be when it comes to digital assets, it's still going to operate in this kind of amorphous gray zone where you can disclaim the risks, but that's really where the light stops. And then we're getting into maybe territory.
Wow, so many more, almost more questions than answers coming from this, but that's, I think, in the spirit of where this is headed, is that there's a lot that's going to need to be addressed in the US and in the world at large. We're at time, but just briefly, maybe you could both any last words that either of you want to mention. Maybe we can start with Josh.
Sure, thanks. And this actually tees off well from what Philip was just saying about marketing. One thing that I just think it's important to emphasize before we go is that even say the ruling in Ripple stands, right, about the primary sales on trading platforms not being sales of securities. Some people in the market were saying, oh, that means we can market however we want, right? Because we're not doing an ICO, but we have to remember there are existing laws and there are a world of laws about marketing, right? Number one, can't commit fraud, whether it's a commodity, whether it's a security, otherwise can't commit fraud. Also, consumer protection laws, also state securities laws and other laws. Also, other countries like the UK has a marketing law relating to crypto that can result in jail time of up to 2 years in certain instances. Not a UK lawyer to say, and the rest of the world as well. Just please, as you do see rulings come down, again, seek legal counsel, because sometimes we may want to construe things more narrowly than we might hope.
Makes sense. Philip, how about you?
I completely agree. It's one of those things where we are still in the dynamic market period of what this legal regime might shake out to be. So I think really disclosure is your best protection at this point. As long as there is a reasonable paper trail that marks what the risks are, what you've been doing in response to rulings or statements from regulators, and making sure that you're vetting those with counsel, with your experts in the space, and making sure that your investors understand this is what's happening. We don't have clear answers, but this is what we're doing in the spirit of transparency, in the spirit of providing information, and in the spirit of trying to stay on the regulators' good sides. That's as best as you can do right now to really have that surefire way to not end up in court going, well, we didn't know what we were doing. We were just selling something, which is never going to win you a day in court. So staying close to your attorneys, staying close to the people interacting with the regulators, and then keeping a pulse on what happens in the courts and what are being stated by these regulatory agencies, especially with as much movement as we have going on in the space right now. It cannot be understated how critically important that is going to be for at least the next 5, possibly 10 years, until we start having repeated precedents being handed out and clarifying where the buck stops in this industry.
Makes sense. Well, again, thank you both so much for taking the time to join. I have learned a lot of things and also started asking a lot of questions. So this was really, really informative. So with that, I think we're going to move on to Carl, who's hosting our next panel. Thank you again.
Yes.
Thank you.
Thank you very much, you both, or you three, better say it, like really interesting panel. I really appreciated a lot of good insights. Thank you very much. Thank you very much, David, for hosting it. And
My pleasure.
now, Puff, here we are alone. So, hello, everyone. Kendra is here, Andre is here, Aldo and Dawn, Julian, I see you also. Aldo and Dawn, you're still like not on visual, so, and can we just test that you're here?
Yes, now.
And Aldo is not here yet. Okay. So thank you very much. This panel is basically concerning Cayman Island, tax haven, reputation about tax haven, or if tax haven are good for the global economy, or if they are just like basically unfair competition to other countries taking the money, and it's basically there is a lot of bad reputation. There's a lot of things misunderstood. So we want to put clarity on this. I have here a really interesting panel. I would like to give everyone short to introduce themselves. As a first, welcome to Digital Davos 2023. Sorry, I prepare already 2024. 2023 in Cayman Island. So I hope to see you also in 2024 at Davos in Davos City. Andrea, I see you for sure. So thank you very much. And let's, like always, start with the women's first, please. Kendra, can you a little bit introduce yourself?
I'm Kendra Okonski. I've spent about 2 or more decades working in public policy, and most recently worked in the Cayman Islands government for about 3.5 years. Can you hear me okay?
Yes, we hear you okay.
Okay.
I'm sorry, I'm just like really old. When I go like this, this means I have to look something closer on the computer. Sorry. Or I have to.
So I was involved in a lot of really.
Yes, you will have also this problem.
The problem with Zoom is that, you know, there's visual cues and there's audio cues, and then if there's no audio, then people like interact in a different way. So
Okay.
yeah, so
like
I
this
just
when I do this.
I worked on numerous initiatives in the government, including new legislation, 3 different bills that were passed last year. So it's been a really interesting experience as a sort of expat, and then as a person who also lives in the Cayman Islands and works here. And I've been here about 5 years. So I think that's enough of an intro right now, and then let's have we can get into the details.
Hi. I have been working in the fields of compliance. I'm originally from the Cayman Islands, so I don't have to say I've been here for a number of years. And with my years of working in compliance, and also at first I was working in accounts, then they brought me over into compliance. And with my years of doing compliance, it's very interesting, very challenging. Because to get the clients to comply with the regulations, and there are lots, and I'm currently studying right now as well. So there's lots of policies and regulations, and I do see the reason for the tax haven. I do see the reason why a lot of my country is constantly on gray list, backlist, because I'm also very heavily in listening to the politics side of things and how my country can benefit. And my view on things is I would like to see something in place more that would secure my country with the regulations of tax haven. So that's my input there, my little short input. Can you see me?
Yeah, thank you.
Okay. Okay.
Thank you. It's really interesting. Andre, let's go to you. I see that you promote again Ukraine and your Ukraine front, probably under Chain VLX. Thank you very much. But Ukraine is not a tax haven as much as I know. So tell me from your VEF and so on, your experience, what you know, and who you are, please.
Sure. Thank you, Carl. Good evening. Yes, I was born in Kiev, which is the capital of Ukraine. But in the 90s, I went to New York as an entrepreneur. I started my first company, built it in $1 billion of revenues. But in parallel, 2001, actually, I started my first VC fund with a focus on the Ukrainian origin entrepreneurs building business in the US. So basically, it's my kind of career of the being venture capital and the serial entrepreneur. So I've been both sides of the tables. I'm still doing it. But also in terms of the regulation, of course, my fund formation were in different jurisdictions, from the BVI's, Cayman Island, the Cyprus, and some other ones. But it's kind of my historical background, so I have kind of experience working in different the locations. Coming to Ukraine, this basically would be interesting for you to learn, but I don't want to steal much more time for introduction, and we can discuss it further, because I'm also the chairman Ukrainian Venture Capital Private Equity Association, and we were behind some of the special legal and tax regime, which is currently ongoing in Ukraine, and you will be amazed what was going on there. But for the intro, already kind of done, and looking forward to speak today with my colleagues.
This is exactly why I have you. This would be interesting. You is tax regime and tax regulations, and Kantra from Austrian economics. Much more to discuss later on. Julian.
Hi, I'm an economist based in Cayman, and I was on the editorial board of the Cayman Financial Review, which was a magazine that talked about the nature of Cayman business and the way in which it interacts with the wider world. In the past few years, since moving to Cayman, I've done a fair amount of work on the detail of the way that Cayman operates, which I think is a very different story to the one that is portrayed in the movies like The Firm and other kind of popular media. I can go into some explanation of that in our discussion, but that's me. I'm an economist, been 30 years studying and writing on economic issues of various kinds, and now mainly do work on issues relating to payments, offshore finance, and related stuff.
Thank you very much. Glad to have you here. Aldo.
Thanks.
Hi everyone. Carl, thank you for the invite and being able to participate in this interesting discussion. Background, I've been sort of traveling the world a bit, so I spent a lot of time in a lot of the I would call it tax neutral offshore jurisdictions. I spent a lot of time in the Channel Islands, the Bahamas, Malta, mainland Australia, New Zealand, and sort of spent the last 7 years currently based in the Cayman Islands. What I do day to day is a little bit different than the other participants or panelists. I guess I have a front seat view of sort of fully understanding from an audit and consulting perspective how sort of institutions, high net worth individuals, family offices sort of go about and allocating capital and sort of where there's appetite and interest, because obviously we see all of that when working with these clients, and sort of just understanding the reasoning behind choosing a location like, for instance, Cayman. And it's not necessarily always because of the tax haven connection, as they call it. Lots of it is just to do with ease of doing business, deployment of capital, and sort of just the regulatory environment being known. Cayman is really over the last 2 decades has built up a funds industry that I call sort of the fund mecca of the world. If you just look at the number of mutual funds and private funds that's registered on the island and the amount of capital that gets deployed from here to benefit the rest of the world in terms of allocating capital for development of infrastructure, food security, etc., etc. So I'll pause there and.
Thank you. Okay, I start right now not with question related to tax haven immediately, but more from an understanding question which some of our viewers may have. And it's clear. Other governments, they charge taxes, they charge sales tax, they charge local taxes, they charge. And this helps them to pay for schools, for streets, for military, and for everything necessary for the country, for the society to coexist. Now, when you hear that there's a government without any taxes and so on, then it seems like a perpetuum immobile or something which could be only possible when you start printing money every time and you probably make tax over inflation, which indirectly Italy did with all the tax evasion. Sorry, no, was just a joke. Don't take it like this. So,
but your question, Carl, is how is Cayman's government financed?
Exactly.
Right.
This is my question.
So it's financed through a mixture of import duties. That's a significant component. So, which is a bit like sales tax, but it's done at the point of importation of goods. There are some other taxes, or you call again duties on goods on island, like tobacco is subject to an on-island duty. But the main source of goods duties is at the point of importation. Then there are fees paid by companies for the ability to operate in Cayman. So you'll pay a registration fee, you'll pay every year, and you'll pay a trade and business license fee if you're a local company. Then there's a fairly large proportion of the revenue comes from work permit fees. So a little bit over half of the population of Cayman, which is now somewhere around 80,000 people, are expats, and most of those expats are either on work permits or on dependency visas, and the work permits range in price from about $500, well, nothing for someone who's working for a non-profit, up to 30-something thousand CI, 35,000 US for a partner in a law firm or accounting firm. So fairly significant funds. I don't have the exact breakdown in front of me, but those are the two main sources of income to the government, and the government has a budget of around $1 billion. So it's not a small amount of income, and that government it provides roads, it provides healthcare for Caymanians, it provides education for Caymanians. So it's a conventional government with a fairly large budget. In fact, it doesn't exist on air, although it does rely to a significant degree on the businesses that operate here, that provide services to people in other countries. The financial services industry in particular is the main source of income in terms of work permit fees. So, and then there's, sorry, I forgot, tourism, which is about somewhere between 7 and 15% of the economy. And that there's also tourist taxes, but they're a relatively small part of the economy, not minuscule, but it's smaller than the financial services.
So, and they are charged by the hotels, or?
Yes, hotels pay a tax, and then there's also a tax charged, or a departure duty charged as well for people leaving.
Okay, so this seems a little bit like protectionism at maximum, like all goods coming in get tariffs on. Everyone who wants to come in from outside has to pay for it. And the own local industry is totally protected to function freely.
I think that we need to add that the geography of the Cayman Islands is really unique. It's 3 very tiny islands that almost no one can even identify on a map if you don't live here or if you don't know where it is, right? Looks like a speck of dust. It's not a speck of dust in terms of its impact in the global economy, but it has very few resources. And in a very, very short amount of time, about 6 decades, it went from being a very poor nation, relatively, not poor in culture, poor in anything, just economically, started out at the same time as independence as Jamaica and Singapore. And its now per capita income is higher than I think it's on par with Singapore's, and Jamaica is very low, so it's like $92,000 a year. So the exponential growth of that over those decades was entirely due to the development of financial services as an industry because of its poor resource base here. You can't do mining here. The ocean is beautiful and has amazing resources, but they need to be protected as opposed to extracted. Tourism is obviously part of that, but this place is a miracle in a sense because we have amazing infrastructure, and all of that has developed in tandem with the development of financial services. So, and a very sophisticated model of governance that is incredibly stable and very, very, it protects Caymanians, but that's because Caymanians should be the beneficiaries of all of this economic activity that's taking place here. So.
Okay, so Andre, when you compare different, let's go to this, we see that financial services basically are the driving force in Cayman. When we, okay, tourism also, but mostly financial services. So you had different VC funds all over the world. What did you see for difference in the jurisdictions? And probably then our Cayman parties can chime in and say what is the advantage from Cayman?
Yes, well, to answer shortly, of course, from the operational standpoint of view, you look in the speed of the services and the price, okay? And obviously, a lot have changed for the last 20 years and specifically for the last 5 years, because now it's very hard to operate for a number of reasons with all the things that you discussed previously, right? But which are making our life a bit harder because, and basically now it's a global competition. And now I would say we're not only looking out for the price of the services, right, but also for the other things attached in terms of the operations, which, as we already discussed before, which has now become a bit of a nightmare for the many the operators to conduct the business, right? Because now the due diligence is not only doing on the GPs of the fund, but on any LPs. Imagine if you have not only institutional LPs, but have the small LPs and or retail investor. So it's makes our life very hard on the fundraising side and also on the execution of the investments, exits, and so on and so on. So basically, it's taking more time, I would say, because historically, we pretty much outsourced all of this to the lawyers. And basically, we just look at this, okay, where to sign, where's the bill? Okay, but now the many GPs around the world, they need to learn, especially the newcomers to the industry, that it's a very complicated world, which is to pity, because basically the idea is like, you do the main things, which is making money, you invest, you work with your portfolio company, but you need to actually not to spend a lot of your time or as less as possible for the things which are at edge for your operations. Okay, so basically, I would say it's a combined picture of the different things, but any GPs, any investors, they value time, okay, because the time is our currency, it's our asset. So basically, I would say that any jurisdiction now is competing for the services, but also for the number of the factors. But if you look at from the client point of view, it's all about how much time you spend, how transparent it is, and in the end, how much it costs in terms of this compliance. And basically, do you need the people inside your tiny team to actually take care of all of this reporting, etc., etc. So basically, this is kind of broad picture, but if you look at this from our lens, it's all about the how much time you spend and how much it costs.
And how do you think Cayman is doing for this?
Well, I would say the Cayman position,
yeah.
Well, historically and probably now, it's a Premier League, right? Basically, especially for the past many years, and believe me, we have also the entities for a number of reasons in Belize or some other kind of exotic islands, etc., which is now harder to operate for the optics. That was already mentioned, this black, gray list. We even don't have a time to keep track of it, especially when you deal with the banks and all of a sudden the BVI is no longer the perceived as a good ones. And you know, it's very changing world. And once again, the reflection is how safe you are from the lens of the banking operations, because you need to not only have an entity, you need to move the capital, because this is what we do. We invest, we get proceeds, you know, all these financial operations that we are involved in. So, and basically, we are kind of becoming hostages of the global financial system that actually, you know, keeping track of our transactions, which are linked to the where you're coming from, if you know what I mean, right? Because every country has their own legislation, all the procedures, etc., etc. So it's all kind of combined in the picture. So from this point of view, the Cayman is positioned in the Premier League, which is perceived still as a good destination to do the business from, and probably because of the Silicon Valley or US funds that predominantly been there. I don't know how it's changing now with the Delaware or the other jurisdictions, but historically, it's still it's a good location. It's a good destination to have a business setting up.
Can we have our Cayman Island guests please comment on this? Because, of course, Andre uses ChainBillX, and for this, he doesn't have to look at the audits because we help him with it. But it's a little bit more complicated to bring your money to the Cayman than it was before. And it's really not, it's still leading in the world, but there are regulations and rules. Can somebody comment on it, please?
I'd be happy to comment. So certainly starting in the 1970s, people started to develop fund structures in Cayman just using the company's law. By the 1990s, there was a realization that there was a need for a more formal structure. So the government passed the early funds law. That's gradually evolved over time. It's still fairly straightforward though. So as a structure for putting your funds in a tax neutral environment, it's attractive relative to others. But over the course of that time, there's also been an increase in compliance costs. But that's happened everywhere. It happened early in Cayman, actually. In the 1980s, the US government required Cayman to sign an agreement to disclose the beneficial ownership of entities that were subject to investigation by the US authorities. It was one of the first in the world to do that. and it's really been at the forefront of this kind of compliance since then, having signed dozens of intergovernmental agreements, tax information exchange agreements, and so on. But those, and now it's fully compliant with the Common Reporting Standard, which is an initiative that is part of the OECD's Base Erosion and Profit Sharing Program. As a result of that, costs of doing business have risen somewhat, although I'm sure you talk to someone like Dawn or Aldo, and they will confirm that although the cost of doing business have risen, it's still highly competitive. And it's highly competitive because it's a tax neutral jurisdiction. That means there is no corporation tax, no capital gains tax here, which means that you're establishing a structure through Cayman where you're pulling funds from different jurisdictions is simpler than if you're doing it in a jurisdiction like Luxembourg, or one of the other European jurisdictions that has the ability in principle to create tax neutrality. And the reason is that they have taxes, right? If a jurisdiction has taxes on corporations, then you have to carve out exceptions, and you have to figure out, okay, where are you paying your taxes to the beneficial owners of the specific entities in each case. So it makes it more complicated. Doing business through Cayman is more straightforward, and it has essentially English common law. It has still a Companies Act that is derived from the original Companies Act. It has a funds law that is enforceable through English legal, the English legal system, with the Privy Council is the highest court in Cayman. So it still makes sense for rather I should say, this explains why the number of funds has been growing in Cayman. The number of mutual funds, the number of private funds has been growing on an annual basis on average over the course of the past 20 years, and it doesn't seem to be stopping. And there's also growth in other areas, in insurance, for example. More insurance captives are structured out of Cayman now than in the past, and going back to the 70s. CRECO and other insurance captives have been structured here. So it's a big, very, very important jurisdiction because of the cost effectiveness and reliability of the system. Knowing that your investments are sort of, in a sense, secured by a legal system that goes back hundreds of years and has enormous amounts of precedent is important. Anyway, so that's my booster for Cayman.
Yep.
So I mean, I totally agree there with you, Julian. We are Americans, and we came here over because of the stability of the legal system to make segregated portfolios, which also allowed in Delaware. They were here better and more legally stable. But Aldo, I know you have also to add to this, please.
Yeah, sure. Just to add on to Julian, and sort of just generally all around very interesting discussion. So yeah, definitely agree. Sort of the cost of compliance has sort of increased, but that's pretty much sort of a global phenomenon. I would say that's not specific to Cayman. Ease of doing business, Cayman has been tried and tested. The fund model, if I can call it that, collective investment vehicles, has sort of its early days going back to the early 2000s. And sort of the profession, lawyers, the accountants, sort of industry, government, and the regulator really worked well together to build a product that's attractive for the rest of the world. So, when people think about setting up these structures, sort of Cayman would generally be top of mind, especially also with its location and proximity to the US. And more recently, sort of LATAM or Latin America, there's been a lot of development and traction, sort of, emerging growth opportunities. Yeah, so cost of doing business is it's high, but it's competitive with other jurisdictions. And another interesting sort of observation is it's not just that Cayman is tax neutral, but I think politically it's also a neutral environment, which, just given the current environment that we're in, a lot of, high net worth individuals and family offices find that attractive and appealing. Sort of not having that targeted on their back per se, but being in a location where it's neutral. It's not favorable to any sort of nationality necessarily, or a specific country that you may be from. Granted that there's lots of compliance and obviously sanctions and all of that, and Cayman is fully compliant, and all these sort of relevant recent developments, and making sure that we do honest business on the island, and we attract the right money and sort of the cream of the crop, if I may call it that, in terms of getting funds here and allocating it to various needs. I've just seen a lot of interest and appetite over the last 12, 18 months of family offices having a sort of a keen and close eye on Cayman, and looking at it as a very sort of appealing and attractive location to potentially re-domicile or move some of their operations here. And then more sort of on the canary in the coal mine, the digital asset side, and I won't go into too much on that. But there's a lot of uncertainty, especially in the US and sort of mainland specific in that area. So we've seen quite an uptick in inquiries, again, at Cayman, offshore jurisdictions, where these investors, allocators are looking for neutral jurisdictions where the regulations and the rules are sort of clear, there's clarity. And they know there's not going to be sort of backdated, reverse engineered, laws that's going to be applied to them. We're also very progressive. The economic zone of Cayman Enterprise City comes to mind. Sort of lots of innovation, technology, incubation. We see a lot of projects and people sort of finding that attractive. And that also has a model with Charlie Kirkconnell that makes the ease, again, of doing business and sort of a fast track of setting up an entity and an organization, more sort of the operating multinational type of entities, and getting work permits and that in a relatively quick sort of time frame, which again, I think just demonstrates that the business community on island is really progressive, forward thinking, and always thinking of ways that we can innovate and sort of improve the speed of doing business, which again is really crucial for sort of the type of people and businesses that we attract to the islands.
Thank you. So I would like to have also Don and Kendra adding to it. I just want to see, we have like 10 minutes left. So I want to also go directly from this question to my next question. So I tell that everyone is prepared for this. And we will go over to basically, why is a tax haven like Cayman Island good for the other economies, or not only bad as an extraction point of money? And basically speaking about what is a benefit in the global economic system to have something like this. But first, please, you can answer when you have to add something, Don and Kendra, to this, what we just discussed, or you want to start with the new questions. Please feel free. You didn't have speaking time yet.
Okay, I haven't got a chance yet, so can I go ahead?
Yes.
Yeah. Okay. So with me dealing with my clients and doing, and like you said, you're asking about taxes. So first of all, I can speak on from my own personal experience and from my clients. If they have to open an account, and the structure that we have here in place in the Cayman Islands for them, it's very clear. It's very easy. It's very safe. And they know they're not being taxed. And then you have a lot of clients that are also retired. So after they do form their operations here, they'll look into, okay, can we retire in the Cayman Islands? And it's fine that it's very low crime. It's a very safe place. So there's a number of combination of things that is offered for them. And we're not finding a decrease because the government is implementing more and more regulations. and we're keeping up. So we're very much offering a service that is growing more and more, and it's growing not just in the offshore, it's actually within the locals as well, because everybody has to do their compliance, and we don't pay taxes, but like I say to many of the people, we're indirectly taxes because 95% of our operations are imported. So therefore, that's where the government is collecting from, and our structure of other operational costs are fees that they collect in order to operate. Given those are the costs that our clients coming here on board, and we're not limited to certain nationalities. The other guy spoke and said we had like a population of 80,000. We actually have a population of 120,000 now, and it's growing. So yeah, with that, I just wanted to say the tax haven is that we have here offers a lot for our offshore, and it's just growing tremendously. So I wanted to say that part first. And the next question, I'm going to get something more. So Trinja can go ahead.
I was just going to add to that I think, or segue, I guess, that I don't use the term tax haven because I think it's very pejorative and doesn't. It's a term that's been invented by someone else. So if you ask people about the Cayman Islands and they say it's a tax haven or they say it's a beach paradise, there's nothing in between there usually that fills in the understanding of what the jurisdiction is, what is its contribution to the world, and what is the counterfactual, right? So if these types of funds that are domiciled here, or indeed the captive insurance industry weren't here, what would it look like in the world? Nonprofit hospitals in the US may not be able to find insurance for themselves. So by having a captive, maybe we're helping people that are less fortunate people in the US to avail of healthcare by driving down the cost. Now, we can say all sorts of other things related to that. I'm just looking at what's the counterfactual? What are the infrastructure projects around the world that wouldn't come into existence and wouldn't generate tax revenue for those governments without the capital that's being pulled here? So this place is innovative in a different sense than what we often think of as innovation by looking and saying, well, what are these legal structures that can be created? And how can we retain our high standards in enforcement of those things and continue to evolve, right? And the evolution of the free society and free markets has been underpinned by that specific evolution of nuanced precedent in law, like the common law throughout the Commonwealth, being able to, and being a bit more nimble than other places and being able to advance on that. So I think those are really important issues at the top of my mind. We don't have time to go into a terrible amount of detail here, but they're worth continuing to think about how we all talk about it and avoiding this pejorative term, and just tax neutral is a good way of discussing it, I think. So.
Okay, thank you. Somebody else for this extent?
Yeah, happy to chime in. Yeah, I just think adding on to Kendra's sort of summary, it definitely offers an opportunity. It provides capital inflows to onshore locations where that can then be utilized for whatever the need is in that specific country or priority. And with that, it's not entirely an entire loss of tax or income tax revenue in the onshore location, because this capital inflows then leads to increased economic activity, right? GDP, more people get employed, more people get jobs, they have a salary, they pay tax on that. More people go to the grocery store and spend money there. A lot of countries have VAT, GST, value-added taxes on a lot of goods. So it's not just all negative. There's actually a lot of benefit and positive impact on these locations from that perspective. And even like if you look at from a tax neutral sort of flip side of the coin, tax neutral jurisdiction, okay, let's say Cayman invokes or imposes a personal income tax of whatever the percentage may be. That third country is not going to benefit from that. That benefit is going to lie with the Cayman Islands. And it's actually going to reduce the benefit to the onshore location, because if there's a tax here, then there's less capital to go out, right? Because you need to factor in that expense, which is now a tax expense. So it's a really delicate balance to strike. But I would say I would sort of look at this as, from a tax perspective, we cannot like think of a one-size-fits-all model, right? So different countries, different jurisdictions is going to have like different models that works for them. And I see the Cayman model as being, instead of an income tax, you have a consumption tax. So, and the benefit of that is users, participants in the economy can actually decide what they spend their money on, because the import duties is 40, 60, sometimes 70% plus on goods that comes into the island. But as an individual, I have a choice on what I spend my money on and sort of how much tax I pay, rather than having sort of a flat tax rate that somebody imposes on me and the money doesn't even necessarily go to where it's meant to be. So I think it's sort of a really delicate balance that needs to be struck, but also just being considerate from a global perspective that, you know, maybe trying to get a one-size-fits-all type of scenario isn't necessarily the right answer. And we need to consider all these. Conscious of time, so just
to go to the final round questions. So we also know here, all on the panels, we are aware, and just I repeat it for the audience, there's also a misconception. You bring the money to Cayman and you don't pay taxes. You're an American citizen. We will report over the GIN number to the government in America, to the IRS. And when you bring the money back, of course, you will have to pay your taxes. So it's not tax avoidance, which you do here. It's you just pay the taxes in Cayman Island as long as you are doing business here, or you have your money here in a fund. But it is not that it's a person which hides your money under the mattress, and it's just like something like this. So there is basically, and this goes to my last question. We know that there is already a lot of regulations between, for example, the United States or Europe with Cayman Island, with disclosure, for example, bank account disclosure and so on. But what cannot be taxed here in Cayman Island, what can be taxed on the Cayman Island? Why do you think that the political system often uses attacking Cayman Island as basically a vessel only for the top 1 per mil to avoid taxes, when obviously this is a mechanism which you also use in Europe, which you can basically hold reserves in a company and so on. So it's beneficial for the companies, it can help. So what is there you thought about in this circumstance? So let's start with Andre. Everyone, just please a minute. And I don't know if you have the same order than I have on the screen. I just go by the order by the screens through with the question. So Andre, please start.
Well, I'm not a real expert in this question, why it's happening. But obviously, from political standpoint, politicians always need somebody to blame. It's a kind of usual game. And but also that's happening because of the global political landscape, because obviously there is the world is changing, and now you see how the introduction of the CBDC, right, in the global markets. Okay, from my standpoint of view, I'm more looking at the mechanism and to learn more from the Cayman experience, how for the country like Ukraine, being in war, can introduce mechanisms that will help to rebuild Ukraine, which is $1 trillion opportunity. But the question is, how to motivate investors by giving the incentives in terms of the tax incentives as well, in order to step in now during the war, not the post-war. So basically, if you look at this from this perspective, then you can do something in Ukraine as a test bed, and if it's good, then you can actually legally replicate that in other jurisdictions that can also in the special whatever situation, etc., etc. So it's kind of more broader issue, how to use the different experience for the special territories. And I'm just using Ukraine as a very concrete example, right? Because it's not an island, it's 40 million, the population country, which is in war, but also the industry is performing. Believe it or not, but Ukraine been in war from 2014, but we have 8 unicorns and 2 happens last summer in the full-scale war because the industry is performing. And the question is how to attract the global investors also by setting up the local special tax and legal regimes in order for investors for some special situation to come in. So it's kind of more broader issue, which is kind of we need to find the balance, or it's just for the tax heaven, or it's for the necessity of the different territories to actually work with the investors and to attract them as well. So this is my take on it.
Thank you, Andrei. Kendra?
I'm trying to think. My dog's barking, so it's very.
Should we overjump you and give you a minute?
Yeah. Why don't you? I can.
Okay.
I'll gather my thoughts.
Okay, Julian.
Yeah, so I wholeheartedly agree with Andrei. I think that the issue is how do you create an environment in which it's possible to make investments in a cost-effective, tax-efficient way. So Cayman does that by having no taxes on corporations, which means that you can avoid double taxation. So you invest through structures in Cayman, whether it's a special purpose vehicle or a segregated portfolio company or some kind of insurance structure or just a private fund. And through that, you invest in activities in other jurisdictions. People don't hide their money in Cayman, right? They utilize these structures in Cayman, which have been developed, innovated, as Kendra points out, in response to perceived and actual demands from clients in other places. And they use these structures to make investments that provide more capital, lowering the costs of capital. And this is a crucial point that that Aldo implied. By lowering the cost of capital in other jurisdictions, you can increase the amounts that are invested. And by increasing the amounts that are invested, you increase the rate of innovation, whether it's in Ukraine or in Taiwan or in the United States. And as a result of those additional innovations, you get more economic growth. And with that more economic growth, everyone benefits. So this idea that Cayman and other tax neutral jurisdictions that have specialized in other areas somehow harm people in other countries is completely wrong. It's actually upside down. And this applies also to investments in African countries. There are significant investments through Cayman, BVI, Jersey, Guernsey, and other tax neutral jurisdictions into Ghana and Nigeria, South Africa, and so on. And those investments enable people in those countries to do better. And they also, as Aldo points out, result in the generation of taxation locally, including corporate income tax. So Cayman doesn't take a second layer of tax, but it doesn't impair the ability of those countries where investments are being made to tax the companies that are operating there locally. Now, of course, over time, companies, entrepreneurs figured out ways to reduce the amount of tax they paid by using all sorts of mechanisms, but those are mostly gone. And in any case, for a jurisdiction like Cayman, they were never a big deal, because here we focused on the kinds of structures, funds primarily, which that just doesn't matter. It's just not an issue. So,
Yeah.
so
Thank
hopefully that gives you an idea.
Just to give also the other people some time down, please.
Yeah, I agree because Cayman, for example, like the Delaware companies, even though the Cayman has no taxes, it doesn't oppose because the other like the Delaware companies or other countries can lower their taxes and they can attract their same amount of clients, just like how Cayman is. Because actually, in my experience, I have already experienced, like I've had a client with a large portfolio, and even though Cayman fees were a bit higher, the overall structure was much more stable and secured. So they'd rather be here. However, there was another country that offered lower fees, and then they went over there with just a small portion of their investment companies that they had. So if we can put something, yeah, like I said, I agree. Put those in place, yes.
Thank you.
So sorry, I'm doing more of the compliance side of things, on the one-to-one with the clients. And I have clients that they come for a number of different reasons investing in Cayman. And they're doing both. So we are opening the doors. I don't think we're just limited. Thanks.
Thank you. Aldo?
Sure. Well, I would sort of focus on the why is Cayman in the sort of, focus point. And I would sort of, personal opinion, ascribe it to deflection from the bigger powers, in that sort of globally you have an aging population. This is my hypothesis. You have a global aging population. Largely infrastructure is outdated and deteriorating. Capital needs to come from somewhere, or the money needs to flow from somewhere to maintain and improve. So, let's focus on the easiest target, which is the, global tax conversation, rather than coming up with entrepreneurial and innovative ways of generating capital and attracting capital to actually fund those needs. So
I think I can.
Did I hear just right when I summary is just that the politicians don't do their job right to attract a new industry, so they blame you? Was this what you just said, Aldo?
I think what I can just nuance it too, because
thank you.
I think that what he's saying also is that there are many places in the world that lack the rule of law, just purely are driven by corruption and kleptocrats that want to take for themselves and do nothing for their people. And so if we can extend the rule of law by enabling economic development in these places through a place that does abide by the rule of law and continues to advance in developing it, that's a benefit for those people, the people that are left out by the despots that are continuing to run these places, that won't advance on governance that is going to be helpful. Property rights, business contracts. I mean, the World Bank's doing business index and all these things that it's very clear what are the recipe, what the ingredients are. The ingredients of economic growth and are not. It's not it's an art and a science, but we know that some components of those things really need to be better throughout Latin America, Africa, and Asia, especially. So I think that's my opinion. I don't know that Aldo shares it, but I'm just jumping off of that. So
thank you so much, everyone. It was a really informative panel, and I appreciate your time. I know that I see most of you. I mean, Julian, Kendra, everyone comes to the dinner tonight, and I welcome you then to the reception party. Then nice to meet you there. And thank you for participating here in this. And Andre, sorry, you're too far away. We cannot import you from Brussels. Like you have to, we sent you an Uber Eats, okay?
Thank you. Sure. Thank you.
Thank you so much.
But to
Bye.
Carl's point, for any of our panelists and or any of our listeners who are in Cayman, hope to see you all at the Digital Davos reception at the Wharf in Cayman this evening at 6:30 p.m.
TKC Fund. Sorry, I forgot always to mention our sponsor. Thank you, David, for sponsoring this whole Cayman event.
Absolutely. Glad everyone could participate. I learned a lot.
Have fun.
All right.
Thank you, everyone.
Thank you.
Thank you.
Bye bye.
Bye.
Cheers.